My mentor, Greg Canavan, has launched a new service in Australia called New Money Investor, and it's all about investing in cryptocurrencies. But there's a far more interesting angle, and that is why cryptocurrencies are even emerging in the first place, why they're so important, why they are needed. And that's the failure of what we call the legacy financial system. And Greg, my understanding is that that's why you've launched New Money Investor in the first place.
Yeah, that's right, Nick. I mean, one of the things that I initially was skeptical of cryptos, like a lot of people. I didn't really understand, I guess, the technology behind it and how it all worked. So, like most people, if you don't really understand something, you tend to be a little bit cautious of it, which was my view for quite some time. And then last year, after the COVID shutdowns and all the torrent of fiscal stimulus that went out into the system and the way that the market reacted from that, I sort of had a bit of a light bulb moment, and I just realized that crypto was the avenue out of a, I guess, disintegrating traditional financial system that really has been, I guess, broken from 2008 is the way that we put it in the service. And ever since 2008, the global economy has been unable to stand on its own 2 feet. I think there was a very limited period in between 2008 and 2019 where central banks started tapering and then started raising interest rates. But before too long, we started to get that debt deflation cycle that pulled the global economy back down again. And then when COVID hit and governments went into debt massively again, it increased debt to GDP ratios hugely. And it just sort of confirmed in my mind that there is no way out for this financial system apart from ongoing continued debt growth and central bank monetization of that debt. And really the crypto market is the free market's response to creating units of accounts, currencies, and a system that bypasses this traditional financial system that is really letting so many people down and leaving so many people behind. And just as an example of that, you look at housing in Australia. I mean, house prices in the middle of a near depression recession have been rising in double-digit rates. That has nothing to do with economic growth. That has got nothing to do with economic prosperity. It's purely to do with the diminishing value of the denominator that properties are valued in. So the currency might not necessarily be going down, in terms of CPI or traditional inflation measures, but when you look at it versus housing, which is a need and a necessity for most people, it is really creating a divide in society between people who have property and people who don't. And once again, this is something that the crypto market, I guess, provides an avenue, not necessarily a solution for these people, because I think that there's a lot of problems anyway. But it's certainly a free market response to this system that is hugely, I guess, discriminatory in terms of the way it distributes wealth.
That light bulb moment you mentioned is why I wanted to do this video, because there's two parts that I think people at home need to realize. The first is that you're a very traditional value investor. I was surprised that you took a look at crypto, given what I know about you. But secondly, the key message here is that crypto has become this speculative mania to some extent. But what it's actually all about is offering an alternative financial system to the government and central bank and banking run financial system. We've sort of lost that, which is a bit disappointing, but your service actually brings it back. And I think this is what the skeptics of crypto, because of that speculative nature, this is their back door into the crypto world, to understand that it's really actually all about a libertarian free market form of money that's an alternative. So let's explain and explore that a bit more. In what way does crypto offer that to readers?
Well, I guess that there's two ways of looking at it. And I think the traditional way is that Bitcoin is seen as just Bitcoin, and it's purely a token, and its value moves around on a daily basis. And of course, that draws in a lot of speculators. The way we view it is that Bitcoin is in price discovery phase, so we don't really know where its end value lies, but there are plenty of reasons to think that it's considerably higher than what it is now. The way I my light bulb moment came by looking at Bitcoin not as just a value and a token, but as an underlying technology as well. So the way Bitcoin works is You have a token attached to the technology, which is the underlying distributed ledger technology. My colleague who works with me on this, Ryan Dintz, explains all this much better than I do, and he's been involved in the crypto market for many years, so he's far more conversant with all this. But essentially, what Bitcoin does is, and this is very different to the traditional financial system that involves middlemen, centralization of money printing. The more that something is centralized, the more control that centralized party has over it. When something is decentralized, it sort of loosens those shackles of control on the issuance and the distribution of money. So Bitcoin, most people understand, has a limited amount of coins that are available. Those coins are released in a diminishing amount over time, and in order to release those, the computer networks that are mining for Bitcoin have to do some real sort of heavy computational work in order to get those rewards. The idea behind combining the token with the technology is that the token is the reward for strengthening the distributed ledger network. The benefit of the distributed ledger network is that it allows peer-to-peer transactions. So therefore, I can pay you directly without having to go through a third party like a bank, and that can be done in real time. There is no settlement period. There's no waiting. There's no, particularly high fees that need to be done. Like if you look at all the payment systems and all the banks, they're still charging, exorbitantly high fees, more and over and above the cost of what it takes to do that in order to have the financial system functioning. And a good example is what happened in, I think it was, is it Ecuador or El Salvador a couple of months ago, where they declared Bitcoin as legal tender purely because so much money was being remitted from the States back into that country. But by the time, under the traditional financial system, by the time that got into the country, there was fees of up to 30% taken from those remittances. Whereas if you do it on the Bitcoin network, the fees to do that are a fraction of that amount. So Bitcoin is essentially a peer-to-peer network. You can put the Bitcoin in your wallet, which means it is self-custodied. No one else is holding onto it on your behalf, and potentially doing things with the assets that you don't know about, and maybe making some fees on the side. In fact, I was just writing an article then that talked about Robinhood, which is the well-known share trading account for the little man. That essentially sells the order flow of the little man to the hedge funds and sells the shares of the little man to the hedge funds. So in order for them to short sell, and they take the fees for it. So there's a whole bunch of shenanigans that go on in the traditional financial markets that cryptocurrencies to many extents solve. And the reason why there is so much criticism and pushback towards this new system is because it cuts the lunch of the establishment. It cuts the lunch of the well-established financial giants who are making these huge amounts of money simply shuffling your assets from one area to another. So it has, and the whole reason behind setting this up is not to talk about how we can make money from Bitcoin and how we can speculate on Bitcoin. It is explaining this unfolding new financial system and how it is going to create a vastly different world in the next 5 to 10 years. And of course, we're trying to find these new alternative investments that people can take advantage of, but it's still very early stages. But this is like the early stages of the internet. There is so much possibility out there, and the type of, I think, companies that are going to be hugely valuable in years to come have probably not even been thought up yet. But I certainly do know that some of the best minds in the world, in computer science and in engineering, are working on these solutions that are an alternative to the current way that business is done.
Let's explore in just how bad a shape the traditional financial system is. The central part, the bedrock, is the US dollar, but that may not last.
Yeah, look, this is a tricky one because, strangely enough, I'm bullish on the US dollar purely because it is the world's reserve currency. So in a financial crisis, money comes back into the core of the financial system, and that pushes up the value of the US dollar. So I have a hard time thinking that the US dollar is going to collapse, because I guess it's the question of going to collapse against what? Is it going to collapse against the yuan, the US dollar, the yen? Sorry, not the US dollar, the euro. They are currencies in equally, if not worse, position than the US dollar. Is it going to collapse against Bitcoin? Well, I guess you could say it already has. Bitcoin's moved from 15,000 6 months ago, and it's still it's around 40,000 as we speak. Gold, I think, is another great longer-term investment to hedge yourself against these issues in the global financial system. But I guess that the core problem with the global financial system is that there is no alternative to the debt deflation situation that we've got going on, because countless studies over the years have shown that the higher the debt to GDP ratio, the more drag on the economy that is. Now, we're trying to get to a point where governments are spending all this money in order to create inflation to get us out of this debt deflationary trap. All that is doing is creating a short-term inflationary or a reflationary burst, and everyone thinks, oh, the economy is now turning a corner, it's going to grow again. But soon after that stimulus goes through the system, you just get the debt deflation dynamics working away again. And we're seeing that just in the last few months with bond yields starting to fall, so that the whole inflationary argument is going out of the market again. And without additional fiscal stimulus, you're going to see talk about deflation, disinflation. Stock markets are going to come under pressure again. And my view is that you'll see probably a maximum of a 20% fall in the S&P 500, and sure enough, the Fed and the US government are going to come out with stimulus. The modern monetary theory crowd might actually get a little bit more traction. The Fed in the last downturn started buying corporate debt for the very first time. So that's just, I guess, a shape of things to come. They will continue to buy assets to prop up the system, and the system can only be propped up by the Fed and the US government and all central banks and other governments continuing to spend money, which is crazy, but that's the only alternative they've got. And each time that happens, there's going to be more capital that will go out of that system and find its way into the crypto world in order to try to preserve assets.
That's the economic side of it. What about the geopolitical side? The idea that the US dollar as the reserve currency gives the US a huge amount of geopolitical clout, which a lot of other countries which are emerging onto the global stage are less likely to put up with.
Yeah, I that's one question that I just think is impossible to answer. I mean, there's a lot of people talking about, China's working on their central bank digital currency, the digital yuan. I've read about how that is going to be the world's reserve currency. The thing is, the US dollar has become the world's reserve currency over decades. This takes a long time, and it's the world's reserve currency because it has managed to generate current account deficits for so long that US dollar treasuries are sitting in the treasuries of other central banks all around the world, and then those reserves are pyramided in other domestic economies to create their own credit growth. So replacing the US dollar is, I would say, almost impossible, and it's certainly not going to happen in the next few years. And the other question is, does any country really want the burden of having the world's reserve currency? I mean, you can get that there is a lot of benefits that come from it, but there's also a huge amount of disadvantages as well. And the US is in a trap because on the one hand, its dollar is the world's reserve currency, and on the other hand, it's a domestic unit of account as well. And the two things are incompatible. So it's, I think it's a bit of a double-edged sword having the world's reserve currency. And this is why some people are talking about Bitcoin being the new world's reserve currency, because it is limited supply. And we're not talking about necessarily Bitcoin being the unit of account, but quite possibly it will be the basis for a new monetary system that will grow up around it. And you're already seeing, stable coins starting to proliferate hugely as a way to sort of grease the wheels of the new crypto financial system. So there's so much going on. I don't know how it's all going to play out, but I'm certainly really interested to see how the traditional financial system continues to disintegrate, and at the same time, how the new financial system will grow up around it and hopefully offer a lot better solutions as well.
What would you say to people who believe that the government has to run the monetary and financial system? There's no way it can be decentralized and free market. Money is a government thing.
Well, I guess you just look at history and say that, it hasn't always been the case. In many ways, to exert control, then the government has to be the administrator of the money and manage it and all that sort of stuff. But we know where that ends up, and it always ends up in a situation where the government will print more and more of it. So a decentralized financial system is a much fairer way to do it. It's more equitable. The problem is that the lobbyists and all the self-interests that love the fact that the government prints money, and they get into the offices of the politicians and they lobby for their own slice of the pie, they're not going to be happy with it. So there's going to be a lot of pushback as this new system unfolds, and whether that pushback will work, whether it'll have traction. Bitcoin has been demonized from day one as being, just the preserve of, what do you call it? I've lost the word, but just pretty much dodgy money launderers and drug dealers and all that sort of thing. But yet it still becomes more popular as people look and see what the other side of the coin is. And the other side of the coin is constant fiat currency debasement, which is, especially as a wage earner, all it does is just kill your purchasing power. And what we're seeing lots of inflation, but we're not seeing inflation in wages. So people's real earnings are going backwards, and the man on the street is not winning at all from this situation. And it really is the 1%, the asset owners that are benefiting from this situation. So at some point, there is going to be a lot more rejection of this current system, and you're probably already seeing it at the moment with the fracturing of societies. And it's not necessarily purely because of that, but that's one of the main underlying factors that's driving, I think, a lot of this sort of discord and disharmony in society.
When I look back at history, what I see is gold, and gold as being the opt-out from the financial system for the everyday man, as you say. So everyone loves the gold versus Bitcoin debate. I know you love gold. We've just found out you love Bitcoin. Let's hear the internal monologue debate that you had between the two, how you think about those two and how they're different or the same or serving the same purposes or different purposes.
Well, I think that I've sort of probably been a gold investor for 20 years and looked into the gold market quite deeply before. And one of the things that I've realized with gold is that it has been financialized by Wall Street. So Wall Street have created a huge paper gold market that is many times larger than the physical gold market. So this, to some extent, absorbs a lot of the demand that people have for gold. So people buy gold futures, people buy exposure to gold and not gold necessarily. So that is one of the downsides of gold, is that it has been, I guess, abused by Wall Street. Wall Street's got its hands on it. It's created lots of financial products out of it, and it has to some extent diminished the potential of gold. Bitcoin, whether that will happen to Bitcoin is another question. In my chats with Ryan about this, he says that the setup of Bitcoin means that it's very difficult to be able to create paper Bitcoin. Bitcoin is Bitcoin, and there's no more being produced as to what the computer code has already been set to, and there's no way that you can screw with that. So in many ways, Bitcoin is a better form of gold because of that. The only thing Bitcoin doesn't have is the longevity of gold, and people understand gold intrinsically. And I think that understanding is starting with Bitcoin, but it's obviously going to take a long time for, the broader people in society to understand Bitcoin the way that they intrinsically understand how gold works.
I want to finish on a peculiar question, which I've heard in a few different places, but I've never heard a decent answer. And it's a fairly simple question, but it seems to stump a lot of people. And it's, why can't central banks just buy all the debt and write it off?
Good question. They can't necessarily buy all the debt and write it off, because what is on the other side of of all that debt. So the way I look at it, and this is going to be a tricky one to explain, but when a central bank monetizes debt, on the other side of that coin, it puts bank reserves into the system. So those bank reserves exist. Like if you go and look at JP Morgan's balance sheet, for example, it's very different now to what it was back in 2010. And there's a huge amount of effectively bank reserves sitting on that balance sheet. So if you shrink the central bank's balance sheet by effectively buying back this debt and cancelling it out, it will shrink the balance sheets of the commercial banks as well. And that's going to be a hugely deflationary event. It will crush the stock market, just to name a few things. Like, I haven't really thought through all the implications, but this is why this whole talk about debt jubilees and all that sort of stuff just won't work, because there is someone on the other side of that debt. One man's debt is another man's asset. So if you cancel out debt, even if the central bank buys the debt, the other side of its balance sheet, it has to shrink that balance sheet to do so, and that will create all sorts of problems. So it's not going to happen.
What about an alternative version of the same question where they don't write it off, they just hold on to those bonds, government bonds, corporate bonds, mortgage bonds, they buy all the debt, completely monetize everything and sit on all of that debt, keeping the reserves in place?
That's what they're doing now. And that's what they'll continue to do.
Greg, thanks for joining us and explaining New Money Investor and explaining the big trends that you think are actually driving the crypto market. For those of you who have been thinking about crypto as a speculative boom, a bit of a mania, I hope you can see now that there's something behind that story, which I think is going to change the world. And Greg certainly thinks so. Greg, thanks for joining us.
No worries, Nick. Good to chat, mate.